Good afternoon, everyone, and welcome to our talk on decentralized finance, or DeFi, for social and economic inclusion. My name is Ian Keane, and I'm your host and your moderator for today's session. We're just waiting for some guests to arrive, so if you could bear with us for 2 minutes. Our guests are actually on another session, and we're just waiting for them to join. Thank you.
Good afternoon, everybody.
Good afternoon, Kraken. We're just waiting on Diego and Professor Lee.
Oh, right. Yeah, Professor Lee just jumped off.
He's just joining now. I see him now.
I think, yes.
And we're waiting on our guest speaker, Diego. So I may actually just kick off and we can go to Diego when he joins.
Yep.
So, okay, we're 2 minutes past. I'll start and I'll start again. Good afternoon, everyone, and welcome to our talk on decentralized finance, or DeFi, for social and economic inclusion. My name is Ian Keane, and I'm your host and moderator for today's session. So how can we ensure that innovative technologies are here for the benefit of all and no one is left behind? Blockchain and fintech have the potential to transform the ways companies collaborate with individuals to accelerate solutions for financial and social inclusion. This is the second of 2 DeFi for social and economic inclusion sessions hosted by Enterprise Working Group of Blockchain Ireland. And today we have early blockchain developers and adopters from Latin America to show us how they have embraced decentralized technology for blockchain for the betterment of all in society. And hopefully they'll provide real world use cases of building the future of finance with Bitcoin. So on the panel, we have experts in education, compliance and regulation, and we're going to hear what the latest updates what's happening in DeFi and regulation. Now, do we have Diego with us? No, okay. So on today's session, we have Alan Naharia from Sovereign. We also have Barbara Halasek from CoinFirm. We have Max Carjuza, the co-founder and CEO of Money on Chain. And also we have Professor David Lee from Singapore University of Social Science. So I want to start, maybe open up the panel, right? I want to read an extract from a book written by a lady called Camilla Russo. And she wrote a book called The Infinite Machine, and it's about decentralized finance and how an army of crypto people are building the next generation of the internet. And it's about 10 lines, so bear with me, please. She starts, "The first time I learned about Bitcoin was in 2013. I was living in Buenos Aires, reporting on the Argentine market for Bloomberg News. But I was more than reporting it, I was also living it. As I wrote about double-digit inflation, the pesos I earned for those stories quickly depreciated. I started exchanging my salary into dollars as soon as I got it. One day the president woke up and said, no, you can't do that anymore. Could it be possible that the government was able to ban the purchase of the US currency, something I was able to do with a click of my bank's website? I want to check and make sure enough the option to exchange my pesos from my local currency account into dollars deposit into my foreign current accounts was nowhere to be found. One day it was there, the next day it was gone. The government was depreciating its currency with populist policies. And now it wasn't even going to let me protect my own savings against economic mismanagement. And this was perfectly legal, and it was the government doing it." So that's the context, maybe. And Diego, you're very welcome. I don't know if you got that piece.
Yes, I did. Hi, everybody. Very nice seeing you, all of you. David, long time no see. Very happy to see you. Thank you. Hi, Barbara. Hi, Ian.
Hey, Diego.
So you read that, you're probably familiar with that piece, right, from Camilla Russo. Yeah?
Absolutely. Yeah. Yes.
So when I read that, it just hit me, right? I'm from a developed nation, and I have never witnessed that type of depreciation or inflation in an economy. I did in the past 20 odd years ago work for an Irish company. It was based in Zimbabwe. That was before it went hyperinflation. But I saw the devastation of my friends and colleagues who were left behind in that country. So what does that mean for you? And why I picked that piece intentionally was most people, I think, in Ireland wouldn't appreciate the motivations for you guys to do the projects that you do, right? So, Diego, do you have a presentation actually before I start down this conversation? Or...
Yeah.
Okay, I'll tell you what, why don't you maybe, so can you tell us, do you relate to Camilla's story? And then maybe you can start your presentation and then we can go around and do a panel discussion.
Yes, I don't have like a formal presentation, but we were discussing this, in a previous talk we gave about the Internet of Value and the potential we see for this technology to provide financial services to those excluded in our society. And that's something we share with David. Not our passion for this technology is about that. It's about how we can transform the society for good, how we can use this technology to half the population that is excluded today from our society. And what you are mentioning is one of the factors that people who is excluded or not being able to access to better financial services or better ways of storing value and protecting their wealth is suffering. No, it's like when you are in a country with hyperinflation, basically you have no resort to protect your wealth or your value because every peso you save under the mattress, that's how people store when they don't have better ways to do it, is losing value by the day. I mean, we had the hyperinflation in the late 80s, for example, was like more than 100% per month. So imagine that. It's like prices were being changed in the stores, in the aisles of the stores, like on daily, twice a day. No, so that's the level of instability, and usually that's related to poor management of the monetary system as well. No, so in that sense, that's why I think all of us that started in Bitcoin started because of that. I mean, we saw the birth of a reserve asset that was neutral, neutral to any political decision. It was just digital gold that was accessible, easy to access. But in my case in particular, and I think many here as well, we realized that Bitcoin alone was not enough because Bitcoin is too volatile by nature, by design. Price is defined by the markets. So it's too volatile. And if you live day by day, week by week, you need stable assets. You need things that in the short term, although they might lose purchasing power in the mid to long term, things that in the short term will be stable and reliable. So that's why, in my case, we started with RSK extending Bitcoin to become a full financial system, with the idea initially of creating things like the ones that Max created with Money on Chain, a peer-to-peer monetary system where people could provide the collateral in Bitcoin, digital gold, long-term preserving assets to create a stable asset, short-term stable assets that could provide stability for those who don't have the luxury of storing value for longer periods of time. No, so that was like connecting the needs of both and creating a shared financial system. And then of course you need to build all the things on top of that. You need to build lending, reputational models. That's a big part of what I think is missing. Is like, every human being, regardless of their economic situation, regardless of if they were born rich, poor, it doesn't matter, has a reputation, can build a reputation, and that reputation can become a collateral for them to interact with others, to access to financial services, to access to better markets. And I think these tools are also providing the elements to build these reputational profiles, these reputational entities. And that's where, you can plug into financial services like the ones that Sovereign is creating, lending, margin trading. So we are in a way recreating the traditional financial system in new rails, in a new infrastructure that is more efficient, more inclusive, more open. And that's a little bit of the vision why we started doing what we do in Latin America, in Argentina and Latin America in general. No?
And tell me, in this country, we've got the financial regulator runs TV ads to tell people what APR is and how to save money on insurance and so on, right? So if that's where we are with the population now, it seems to me, and certainly in my journey, I had to learn a lot about finance, even to kind of understand the basics of DeFi. So obviously there's a gap. If we have in this world, we got TV ads telling people basic financial stuff to protect them. How is there a motivation there when people have their savings totally depreciated to nothing? Is there a need or a motivation there to learn about this stuff?
Yeah, absolutely. And I think that's why most people in Argentina, at least, is, I think you mentioned a very important thing. No, it's like when you go to the first world, usually except people who is like sensitive to social distress like David, and but when you are in the first world, you don't have that connection with what it implies to be in an unstable economy, what it implies to live like in a situation where you are exposed to all sorts of manipulations of the financial system, and you don't have a resort to protect your wealth, and you see that your work is never paying off because you can work long hours. I always said, like, people say, no, Argentinians are lazy. That's not true. Argentinians work like many hours from the morning to the evening, and even in those conditions they cannot thrive. Even entrepreneurs, it's not only the people who is excluded. Entrepreneurs thrive to make a living, to be successful, because the lack of these conditions, because the lack of proper conditions. So,
well, money has lost an important characteristic. It's no longer a store of value. It might be a unit of exchange and a unit of account, but it's not a store of value. And once you deprive people of being able to store an economic value, you rob their future, right?
Yeah, I think David is the expert here. He can speak better than me, but in my lay terms, what I explain is like money is a way of managing intertemporal debt. It's like saying, okay, I want to exchange some sort of value and I want to transform that value in something that will retain value over time. So I can exchange that value that was exchanged again with different parties for different reasons. It's a way of like creating an objective intermediary between points in time, in exchanges in time. So it's like today, if you give me a chicken, okay, how many eggs or how many pigs is a chicken, or the other way around, how many chickens is a pig? So we didn't have that tool to objectivize exchange of value, and maybe for you, a pig was 5 chickens, for another person was 6 chickens. So money in a way enabled us to find this objective pattern for value,
Yes.
And in a peer-to-peer exchange, that then that's okay, because it's subjectivity of both parties involved defining the exchange. But if the money itself has a subjective element, so if you have the seigniorage of the money, so the person who manage the money can change the rules of the money at will, and sometimes against the benefit of the people using that money, then you have a third element of subjectivity, that is the one creating the money. And in that sense, I always give this example. For example, when the US, in a dollar-based global economy like the one we had in the past, I don't think that's longer the case, but in a US dollar-based economy, if everybody in the world is storing and using the dollar to do the oil agreements, international trade agreements, if they are storing value in dollars, and the US Fed prints more dollars, let's say 10-20% more dollars, then basically what they are doing is removing value from everybody in the world that is storing in dollars, and then redistributing that value at will. So they redistribute that money. In the case of the crisis in 2008, 2009, they decided to redistribute that value into the financial system of the US primarily. Then it will leak into the other system, but that's like a subjective decision, no? And in this case, they are doing the same with the last printing, but doing it into the base of the US citizenship. Still is a very subjective way of redistributing value. It's like, so that's the point. It's like you have the peer-to-peer exchange of value, where we define in a peer-to-peer way, like we used to do in the village, no? Like how much the things are valuable for each one of us. And then you have this means of transaction that if it's not objective, then it adds another level of subjectivity that most people is not aware of. They just suffer it, but they are not aware of, no? And this is what has been going on, I would say, with the history of money, mostly in the last 300 years, where nation state and money were joined. Before that, money was mostly private, no? But I think that's that realization after 300 years of the nation state and the central bank's operations. Now we are understanding that they were a tool. I mean, all these things have been built because of a need. They don't have like a bad intention. It's like they are just tools that we create to, thanks to this financial system we have today, we can have a global society. But we know now that this model also has limitations, and that's why half the population is excluded. And that's what we are trying to build: innovation that can solve the shortcomings of this former legacy financial system.
Yeah, good. I want to bring in Max here. Max, can you tell me a bit about money on chain? And in simplistic terms, how would somebody use your service? I assume we deposit Bitcoin and we could do something, we can get loans maybe, or?
Well, actually, money on chain has no loans, but basically we have two very interesting tokens. One is the dollar on chain, that is a
dollar on chain. Is that a stable coin?
Exactly, it's a stable coin pegged to the US dollar. A couple of interesting things about the dollar on chain is that the peg is guaranteed by the smart contract. You don't depend on secondary markets. Okay. And the other interesting is that if you want $100 of dollar on chain, you just send $100 of Bitcoin to the smart contract. And if you don't want your dollar on chain anymore, you just send your dollar on chain to the smart contract, and the smart contract will give you $100 of Bitcoin back. Okay. The other token that is very, very interesting about money on chain is the BitPro. The BitPro is a liquidity token built for long-term Bitcoin holders, and it allows to capture all the money that dollar on chain holders leave on the table. So it's a very interesting token for Bitcoin holders.
So this is like a DEX, a decentralized exchange, is that right? And you invite people to provide liquidity?
Not exactly, because you are not buying the dollar on chain or the BitPro from someone else. You are just minting or redeeming your dollar on chain or BitPros.
Very good. And is that a collateralized loan, or is it just a straightforward swap, one-to-one?
When people buy the BitPro, they are adding collateral to the system and allowing another party to be able to issue dollar on chain. So people buying the BitPro are adding liquidity to the system and are earning a passive income in Bitcoins. Yeah. For example, in the last 12 months, the BitPro earned 20% in Bitcoins, approximately.
20% interest on Bitcoin?
Yes, 20% in Bitcoin. That is not, of course, that is not guaranteed. That depends on market conditions. But in the last 20 months, the BitPro earned 20% in Bitcoins.
Which is a lot more than I get in my current bank, I have to say.
Sorry, I didn't get you.
It's a lot more than what I get in my regular euros account. My bank, I think, charge me. I don't get any interest, but they charge me to hold my euros in my account.
Oh, yes, absolutely. But, yes.
Okay, good. And who else we got? sorry, Alan, could you maybe talk to us about your service offering? I think you offer lending, is it, did I see?
Yeah, so Sovereign is essentially a service built also on layer 2 to Bitcoin, meaning it leverages Bitcoin's security assurances and you only need Bitcoin to interact with it. And the goal of Sovereign is to give users exposure to more sophisticated financial services. So with Bitcoin, you hold on to a decentralized monetary asset. With Sovereign, you can come, take that Bitcoin, and now you can collateralize it and get a USD denominated loan. You can lend out your Bitcoin to margin traders or provide it as liquidity as a market maker to the smart contracts and earn passive yield. You can trade Bitcoin against other assets. You can margin trade long and short Bitcoin and in the future additional assets, and all in a non-custodial, permissionless way, aligned with the values of Bitcoin as well.
Okay, and do you issue your own stable coin, or do you use?
Sovereign doesn't issue its own stable coin. Actually, Dollar on Chain is one of the stable coins that are leveraged in the Sovereign system.
Yeah.
But Sovereign as an open protocol that has also decentralized governance, the community around Sovereign can decide to add additional tokens, and that's what we've been seeing so far. Additional assets have been added all the time, and we expect that to continue going forward.
Very good. And tell me, what would your view be on regulation? Do you see it as a possible enabler for your business to grow it? Or have you given it any consideration? Or is there even any room for regulation in your business?
Well, obviously, that's a difficult question that a lot of people are contending with. And there are no clear answers, at least with regards to the question of how regulation is going to be applied to the decentralized financial space. But I think there are a few basic principles that if a protocol exhibits, it in many ways becomes immune to regulation. And so firstly, the most important one is there any central entity that controls the smart contracts? So as a developer of systems or a maintainer of these systems, you deploy these smart contracts in the wild and people can interact with them. No one can gatekeep people from using these smart contracts. For instance, with Sovereign, we also manage a front end where people can come and they have a GUI with which they can interact with the smart contracts. But they could simply go directly to the smart contracts, write a script, and interact with them that way. Anyone else can come and create a front end for these systems. And so long as there's no central operator, so long as there's no entity that is maintaining custody of user funds, and so long as the finality of the system is assured by a blockchain, in essence, it becomes unregulated by the traditional legal system. The regulation comes from the smart contracts themselves. It comes from the blockchain itself. And so there is regulation. I don't think it's right to say that there isn't regulation. It's just a new form of regulation, a new form of consensus.
In code is what you're saying.
Yes.
And then you got a community around supporting it and so on. Okay. Barbara, just over to you, right? You've looked at this space from a CeFi point of view and look at how perhaps we can regulate DeFi. And I'm thinking regulation and how do we protect the people that come over to DeFi? Because clearly we can see here, we've got sophisticated products written by sophisticated people, but you also need sophisticated users. So how do we bring the unsophisticated users to DeFi? Would you have an opinion on that?
Sure, I don't have a clear answer. I think if anyone had, the regulation would have been already there. What's happening though at the market at the moment is Financial Action Task Force, FATF, has issued recently guidance in March 2021 that was put forward for the industry for discussion, where they actually state quite explicitly, look, decentralized finance is also subject to anti-money laundering regulations.
Yeah.
There's quite a lot of definitions or statements in that guidance that still has to be clarified. It's great to see that the regulators are upfront with their publications with the industry, and they're engaging the industry to clarify and to get opinions. So we as blockchain analytics company, we've been heavily involved in the discussions as well with FATF, stating our opinion on the formulations there. And it's a bit of a let's say question where there's no simple answer, but I'm sure the answer is there. We just have to approach it with open minds. And what I mean by that is there's an argument to say, well, there has to be some sort of framework to ensure that decentralized finance is not used by sanctioned parties, by terrorist financing parties, etc., etc. But there's a second element to that, to say, do we really want to do drag and drop from the traditional finance and just copy and paste the regulation and the controls that are applied to traditional finance, knowing how different the blockchain space and even more so DeFi space is?
Yeah.
And this is where we come in as CoinFirm, and well, not only us, in terms of trying to figure out what is the best way to approach that. What we have been offering on the market is the Oracle solution, where for the decentralized finance, we acknowledge the fact that there's no central party that could, let's say, stop illicit actors. And instead, we deploy Oracle solution that actually automatically checks the funds inflow and outflows against our risk scoring of the addresses, and has the functionality, the ability to stop the illicit actors entering the DeFi space. So again, there's two aspects of it. Does it need to be regulated? To some extent, yes. And I think it's unavoidable. It's a matter of time. I don't think any of the regulators would allow DeFi space to be completely left unregulated. Does it have to be regulated in the same way with the same ordinance responsibilities that traditional finance has? I don't think so, and I hope that's not going to happen. And just perhaps add to that from my personal perspective, I've been living in different countries and experienced the regulatory hurdles myself. Coming back to what Diego said about Argentina, also spent some time with Argentina, so great supporter of financial inclusion, knowing the problems of the country. But we also have to be realistic, right? Without embracing some level of regulatory aspect, it's bound to, let's say, less widespread adoption, so to speak.
Yeah. It's interesting. I mean, I just look at some of my notes, right? I'm looking at Mario Draghi. I know he was the ex-ECB chief now with Christine Lagarde, but something's changed because his view was cryptocurrencies are not mature enough to be considered for regulation, although they should be critically assessed for risk. And that's probably 5 years old, that quote, but something has changed in the last 5 years. Was it because after 2017, 2018, the Bitcoin boom bust cycle, or is it because potentially DeFi is not quite a threat, but certainly competition to the existing system that maybe the bank, the financial industry now needs to look at it? Do you have any opinion on that, where that changed? Because DeFi must be new to you. I'd imagine 12, 18 months ago, you weren't talking about it. So how did it become mainstream, not mainstream, but how did you
the focus, right?
Yeah.
So I guess the question is why the focus of the regulators on that aspect. And again, I don't think there's one word answer to that, but a couple of factors that I'm definitely seeing is, first of all, the institutional adoption of cryptocurrencies. Yes. There's more and more big players entering the market and getting exposure to crypto assets, allowing their customers trade or store and custody service crypto assets. And with big market players comes inherently the the need for let's say clearer guidance and regulation on that aspect. The other element is exactly what you mentioned, and it's not something that well, let's say regulators or countries or banks would admit quite openly. I do think personally that it is a factor. DeFi has been bringing a lot of focus from the financial institutions in terms of possible competition. And there's different views on that. Actually, ING Bank recently published quite an interesting analysis of their view on DeFi and how it may threaten or interact, or how it can actually make a let's say cooperate with centralized finance.
Yes.
So there's definitely DeFi is definitely in the spotlight of the banks. I would say even more so than crypto assets were without, let's say, prior to DeFi's popularity. And I'd say numbers speak to themselves as well. If you look at the growth of the market in DeFi within the last year, the growth of the market capitalization for crypto assets, it's a clear signal for the banks, for the businesses, for the regulators that yes, crypto assets are with us, they're not going to go away, and it's just a matter of time before a mass adoption takes place.
Well, that's interesting, the mass adoption. One thing, before I get on to that, I understand the need for regulation to protect people, but maybe my friends from Argentina here would say the regulator in Ireland certainly is here about protecting its people, but we just seen in Argentina, they're not here to protect the people, right? So maybe the DeFi and the pure code is there almost as a warning to the government, say, hey, if you misbehave, we're going to take the economic energy out of the current system and move it to a decentralized system which you guys can't touch. That's only my statement. I'm asking you to comment on that. And go on, Diego.
I would like to add a couple of things to.
Please.
I fully agree with her that regulation is coming in the sense that, I mean, we have two financial infrastructures running side by side. We have the traditional financial infrastructure, the legacy financial infrastructure that is based on law, on nation states, and then we have this new financial infrastructure that is based on protocols, on programmed rules and enforced by decentralized networks. So one is based on code, if you want, and the other one is based on law. Yeah. The law, you might argue that the law is code, no? Because in a way, when you see a contract, it's a lot of clauses that say, if this happens, then this will happen. These are the parties involved. So at the end, a legal contract is like a program, like a computer program. It's just written in paper and executed by the judicial and police system. No, but at the end, is a different type of computer, but it's logic rules being executed by a system. So what we are doing is doing a system that is less subjective in a way. You know, again, going back to my previous point, it's like what we are doing is rebuilding the financial infrastructure in an objective or neutral environment system. And in that sense, I don't think like complying. I mean, of course, the nations have the duty to put the regulations and you know, protect the mores in Latin, no, the customs of their nation, because each nation resolves the ethical dilemmas in different ways, and that's okay. That's part of how we are. You know, human beings are diverse, and nations are a representation of that certain type of diversity, certain way of resolving. So the laws, the regulations come from those customs. They don't come out of the blue, but usually they are reflecting the past, not the present. It's like, you know, regulations take time to change, and they change when the customs of the society change. And that's why we always have this tension between innovation and regulation. It happened with Skype, or what we are living at this moment, this precise moment, like having a conference with people around the world, you know, in real time with almost zero cost, was impossible to think like 25 years ago. And the regulations were designed to protect the national frontiers of telecommunications. I think, you know, those who were there remember that the telecommunications regulations were very, very strict. And that's why also telecommunications were extremely expensive across borders. Like, you know, international telecommunications were costing like, I don't know, a few dollars and then regulation has to change, because it had to change when Skype started, when other, peer IP voice protocols started to break those boundaries to enable new things. And it took like 10, 12 years until the regulation catch up with this new context, with this new innovation. And I think in cryptocurrencies, we are in the same place. It's like, we are definitely breaking rules in the sense that we are creating new things that were not possible before. And it's not only that the technology needs to adapt to regulation, but also regulation needs to adapt to technology, because this technology is bringing a lot of good and wealth and prosperity to society. So regulation function is not to stifle innovation. Regulation function is to protect these values that a certain society has. Yeah. And I don't think it's as adults, what we will have is like this new financial system running side by side with the nation state financial systems. And in the interface, that is mostly the brokers, the exchanges, the regulated financial institutions that operates on both worlds, that's where regulation will be applied. But this regulation, these technologies also offer us an opportunity, that we can create incremental, compliance. We don't need to, now because the lack of better means to do it, now the regulation, and Barbara was mentioning AML, CFT, as part of the, the AML CFT model is only applicable to people who is handling like certain level of money, like, people who is handling transactions of $2,000. But most of the people we can serve with these new technologies, people that will handle maybe $100 per month. So we need to create incremental compliance models where if somebody is only moving $100 per month, regulation and compliance should be almost non-existent. If the person, maybe a phone validation is enough. If the person is starting to go from $100 to $400 per month, then we can say, okay, we need some sort of domiciliation. And only when it goes up above $400, that is like the survival line of a human being, we can say, okay, we need some more information. But we need to also adapt regulation to the new tools that we have at hand. So also regulation is inclusive. So I don't think it's like, it's just about like applying the regulation we have and then disregarding the potential of these technologies to make a better society. Same with taxing. I think we can have incremental taxing models that are more inclusive, that, if somebody's, deciding to put food on the table or not, we should not be charging taxes to that person. We should give all the money to that person so they can live, so they can like provide better food and tools to their kids to grow, to improve in life. But we didn't have the tools until now to do that. And that's the potential of this technology as well. Now we have the tools to do that, to do this incremental regulation, incremental taxing models that will be more inclusive.
Great. I want to bring in Professor Lee, because Professor Lee, I know you need to go early. Very welcome. Yes. You've written books on digital currency as far back as 2015. I think the Handbook for Digital Currency. So you're well familiar with this space. And being an educator, what do you see if we were to bring the masses in terms of education, to bring on the masses into DeFi? Or do we need a layer between DeFi and the people to protect them?
Yeah, and I think all the questions you're asking, and Barbara, and Max, and Diego, that discussing is really interesting, because that is where it's important. I would just like to look at one point, which is the cost of trust, because where it's very chaotic, where the cost of trust is very, very expensive or very, very high, then you will see that the DeFi space actually comes in very interesting. But if you try to summarize a lot of things that we're talking about, for example, the user experience, it is a deterrent for the masses to use, even for a simple transfer of a e-wallet and private key and public key to protect that. Mm-hmm. So naturally, that if people don't trust, they don't come into the industry. But as more people participate, and no matter how sophisticated you are, you may not really understand every line of the code that you have, and you will quote auditor, sometimes you can see cases where people can run away with 37 million
Yeah.
or 40 million of a DeFi platform. So it doesn't matter how sophisticated you are as a user. Sometimes there are things that you don't really know and are not aware. And this is about awareness that we're talking about. How do we bring the awareness to people? But if you look at from the angle of cost of trust, and we talk about regulation and have mass participation, then again, we are going back to the same question. When we have DeFi, it is supposed to not have a centralized or a trusted third party. But as we go on, we realize that it is a different form of trusted third party, but it costs a lot less. So what we are talking now here is that we want to have mass adoption. Clearly, there will be a new form of trusted third party that will emerge, whether by regulation or simply that as an oracle. Of course, we can decentralize oracle, or when you move to the physical world, we can of course continue to decentralize, but there's a process. When we are talking about DeFi, it is like a journey that we have that, there's on the one side, should we bring all these people in? But regulators in US, like Hester Pierce are talking about, as regulator, are you sure that we know what investment is the one that give you the best return? Are we that smart to know as a regulator, if we don't democratize investment for crypto world to the people, are we doing the right thing? Because the stock market may collapse, the debt market may just disappear overnight, and crypto may be the prime assets that people trust in a chaotic world where the whole financial system going through a transition period. So as regulator, how can we as regulator dictate what to invest in? So it's a very complicated issue. And I think from the perspective of cost of trust is that if we can reduce the cost of trust, because the whole movement of Bitcoin and the whole movement of DeFi, the whole movement of what we are seeing now is that there's a real issue with the trusted third party. The cost is simply too high. And if we go towards this direction, perhaps to answer your question is that we got to focus on the cost of trust. If we continue to reduce the cost of trust, it doesn't really matter if there's a trusted third party, provided the cost of trust continue to be cheap so that the compliance cost is not too high to exclude anyone or exclude any institution. So let's go back to the basic idea that once you have anything outside the blockchain, Oracle is a trusted third party. We can decentralize that, but we have to make sure that whatever trusted third party, the cost of trust is enough at the level that we can include as many people in there so that even you get cheated, you get scammed, that cost is not that high. So I hope I answered that. With that, I will say goodbye to everyone because I have another event to join. So thanks very much for inviting me, Kraken, Yan, and Diego. It's so nice to see you again, and good to see Max, Barbara, and Ilan.
Thank you, David. Yeah.
Thank you, Professor.
I want to say David is more than a teacher. He's a legend, and I think Singapore owes the depth of the whole blockchain movement and Bitcoin movement to him. He's really, so it was a great pleasure to see you again, David.
Yeah, good to see you, Diego. You are the legend. I'm just a note of the whole activity. Okay, bye. Thank you very much, everyone. Thank you.
Thank you, David. Yeah, good to see you again.
Great. Okay.
Yeah, I think that was a great point. Indeed, when you read the Bitcoin white paper, it starts about talking about that, about the cost of intermediation, the cost of. So that's an amazing point, and I agree. We discuss a lot that decentralization is a tool. It's not the final goal. It's a tool and it's a process as well, because there's always something else you can decentralize. David mentioned the oracles, for example, that in DeFi they are present almost in every protocol. It's like there's maybe 2 or 3 protocols, DeFi protocols, that don't depend on oracles, that are fully self-managed and without subjective intervention. oracles are not subjective per se, but they introduce an element where subjectivity can be put. So that's why instead of thinking on decentralization in black and white terms, I think we need to think in a continuum, where decentralization is an aspiration to protect what we were saying, no, the neutrality, the openness. So it's a tool. Decentralization is a tool to preserve that ethos of Bitcoin. No,
that's a great point, because I could go to Uniswap now and swap my USD coin for wrapped Bitcoin, and both of those are actually centralized products. But I'm swapping centralized products on a decentralized platform, and I wouldn't even think of that. So USDC is centralized, and so is wrapped Bitcoin, because I think you need KYC to get that. So you got centralized assets on a decentralized platform. So just I have a question here. I can ask for the DeFi developers. And so Diego, what does Bitcoin mean to you? Is it a digital asset, or is it much more?
Well, I think Bitcoin, of course, is a digital asset. That's one of. But the thing is, one thing is Bitcoin with the, uppercase B, and the other thing is Bitcoin with lowercase
B. The protocol versus the coin. Yeah.
Exactly. So Bitcoin with the lowercase is the asset. No, and in my perspective, of course, this is arguable. Only the people using Bitcoin will decide what it is. But in my point of view, Bitcoin is digital gold. Is this neutral reserve of value asset? That will. It has so many implications to have digital gold in an uncensorable platform, and it has implications that go beyond the economic implications. It has social implications. It's a contribution to peace. And when people attack Bitcoin for the energy consumption, it's like the first thing I think is like, what about the money being spent in tanks, airplanes, bombs all around the world to protect certain types of assets, through violence, and Bitcoin is a peaceful way of like removing that subjectivity and stopping wars all over the world. So if you ask me if 3% of the energy of the world, it's not that it's that much, but if we were to put 5% in the future of the electricity of the world to have a more peaceful world, I would say where I have to sign. And that dichotomy of like the expenditure of energy versus the environment is not true, because 77% of Bitcoin energy today is renewables. So it's like, I think we need to think on what we are doing, but that's Bitcoin as an asset. Bitcoin as a network with the I would say is becoming a full ecosystem, no? And Ilan was mentioning that it's like Sovereign is working on layer 2 to Bitcoin. So Bitcoin is no longer that layer 1 alone. I mean, the layer 1, the digital gold is of course the cornerstone. You cannot build a big construction, a big building on weak foundations. So layer 1, Bitcoin, the digital gold, is the foundations of this skyscraper we are building. But now Bitcoin has many layer 2 protocols secured by the same infrastructure, and those protocols can provide financial services and sovereignty, as Ilan was saying, to billions of people around the world. Not only the excluded. I think it's like, in that sense, of course, my focus when I started with RSK was on the excluded, but what I want is that we all together, the ones present here, we create a financial system that will be inclusive by design, and not non-exclusive system. So it will serve anybody. It will serve the rich, the poor, the middle class. It will serve any human being and give them the tools to be sovereign and also to thrive. No, so in that sense, Bitcoin, it was not very clear at the beginning, but Bitcoin now is clearly becoming this financial system of the future in my point of view. No?
Just on your point there, Michael Saylor talks about the energy consumption of Bitcoin, and he makes the point that 30% of the world's energy is wasted. It's not actually captured. And of that, Bitcoin takes a small amount of the world's consumption energy, which is about half of 1%. So it's almost a buyer of last resort of the energy that's going to be pumped anyway.
Yeah,
you know?
I didn't get into that point, but that's
Yeah.
that's the other thing. Bitcoin is a scavenger of energy. It's not a
Exactly.
predator.
Yeah.
It's not competing with the industries. It's not competing because, as simple as this is the easiest way to understand that is like Bitcoin miners are only viable if they pay 5 cents per kilowatt.
Or less.
Any industry in the world will pay 10 cents or more
Mhm.
to do any productive work with energy. So
Yeah.
so that's as simple as that. If you have people paying 10 cents, why you are going to give that energy to a Bitcoin miner that can only pay 5 cents?
Yeah.
So at the end, there's only one exception to that I also explained. So to try to be as objective as possible, when you have subsidies from the government or corruption, of course, if you pay a politician to use a dam, the electricity from a dam without like paying the actual price, of course you are like, or you activate a coal mine, a coal-based power plant because you are paying a politician that only charge you 2 cents. Okay, but that's corruption, that's mismanagement of subsidies in the government. That's not a problem for Bitcoin. And indeed, every time that those, for example, in Canada, when subsidies for productive areas were being used by Bitcoin, very soon the governments remove the subsidies, and then the Bitcoin miners move somewhere else. So, so it's about that's not the responsibility of Bitcoin. If the price of the electricity is not distorted by corruption or subsidy, then Bitcoin will always be a scavenger, not a predator of energy. So,
Alan, what does Bitcoin mean to you?
That's a very broad question. I think many people look at Bitcoin and they see different things. Some see a new economic tool, a new financial tool. Others see a tool for freedom. Others see the most secure, massive computer network that humankind has ever created. I think for me, it's mainly a tool to allow for human freedom, human expression, and human sovereignty. I grew up in South Africa, and my family was living under apartheid and wanted to leave the country, and they simply couldn't because there were capital controls in place. An arbitrary decision by the government to depress any populations from wanting to leave the country. So the minute government has a monopoly over money, it has a huge amount of power over people. And I think it's more nefarious than other forms of power because money isn't a very well understood concept. It's a very abstract concept, and it includes a lot of different societal, psychological, game theory aspects. And so when a government or any elite or power can manipulate this tool, very often the people who are at the raw end of that deal have a very difficult time identifying that manipulation, which makes it so much worse. At this point in time, I think Bitcoin is a reactionary force to these powers, to this monopolization of money. I think only our imagination is the limit to what it could eventually be. I mean, sovereigns building financial infrastructure on top of Bitcoin. I expect there to be many revolutions. And I'll give you an example. A lot of people that are contributing to the sovereign community, firstly, they can do it anonymously. They can do it and they can get paid for their work without having a bank account, without having a contract. And a lot of the times we don't even know who these people are. And when you start talking to them, you understand that some of them are 15, 16, some are in their 20s. And I think it really shows that there's you were touching on education earlier. I think there's a new generation growing up who these concepts are much more naturally perceived or understood. And they are much more comfortable living in a global world. And the idea that for them it's difficult to work for someone across the world or to contribute to a project that pays them across borders, not having that ability seems strange. The traditional financial system to them sees archaic and unnatural in some ways. And I think education is a big part of getting to mass adoption, but I think it's only a matter of time as more people, especially from developing countries, utilize these different technologies in their day-to-day life. I think Bitcoin is going to express itself in ways that we can't imagine. When the internet came out, people thought, okay, you could send messages between people easily, but no one really imagined things like Amazon and Uber. And I think the same is going to happen with Bitcoin. And you see that the narrative around Bitcoin changes. Currently, it's gold 2.0 or digital gold. I foresee it changing many times in the future as our understanding of what it is improves.
Yeah. I've talked to financial experts in private. They wouldn't go public, but they reckon Bitcoin will easily capture gold's market in this decade. They won't give you a time frame. But it's interesting you say that because, you go back to 2017 when we had the block wars, what size it should be. It was all about Bitcoin being a currency. But I think somewhere along there, the whole narrative of it being a currency failed. And out of that, it came, you know what, this is an asset. And this is stuff we can build on, Max, we're into the final minute. So you get the last word, Max, if you don't mind. What does Bitcoin mean to you, please?
Oh, Bitcoins for me is digital gold.
Yeah.
It's immutable and distributed ledger, and it's freedom.
It's freedom, yeah. And do you see it to my point, I think it just became gold, I know, 3 years ago, or we can say that now, right? I think everyone will agree that it is a digital asset. I suppose that became with legislation, certainly in the US, where the the regulator, the SEC, and even the IRS legislated as property. So they actually legally said it's not currency. So you can call it currency, but they don't treat it as a currency, right? Because you can tax it as property. But for you, it's freedom, and it's kind of the stories I imagine. We spoke about Camilla Russo, her story in the beginning. I think that's resonated with you. You've witnessed that.
Yes, absolutely, absolutely. I am right now. I'm living in Uruguay, but I grow up in Argentina. So in Argentina, you don't have to explain Bitcoin to people.
Yeah.
When you show Bitcoin to people, people realize that that is a solution for them.
Yeah. And on that point, now that they know that, because they were robbed of their savings, there must be a massive motivation there for people to learn.
Exactly.
Was that the catalyst there in Argentina and South America?
Imagine that when Bitcoin appears in Argentina, you were not allowed to move money cross-border. You were not allowed to buy US dollar. You were not allowed to buy gold. And we were living with 40% inflation.
Yeah.
So even the volatility of Bitcoin was a solution for an Argentina.
Yeah, because over the period, it went up against the peso.
Exactly.
Yeah.
Exactly.
Thank you. I think we're top of the hour. We'll be 1 minute. Does anybody have any questions, or will I close off?
So we do. We have one question.
Oh, great. Thank you, Amber.
And it's related to what Diego was saying about Bitcoin and energy consumption. So Connor's asking, could there be a market for green energy only Bitcoin in the future where buyers only want coins from 100% renewable energy sources? Thank you, Connor.
The truth is that for how the protocol works, it's almost impossible. There was an interest to create what was called the virgin Bitcoins, that were supposedly Bitcoins that were coming directly from the miners that produced them. But I mean, even in that level, it's tough to because, for example, when a Bitcoin is produced or a transaction is created on a block, actually you have many miners contributing to that. So you should have to be auditing each one of the miners contributing to that process. And then when you do the transaction, let's say that the first block where the Bitcoin is created is virgin and green, the following block might be coming from a coal power plant. So at the end, it's like everything ends up being tainted. There's no such a thing. It's like, I think the whole ecosystem needs to grow, and again, it's happening. It's already happening, because I think we don't have to think of Bitcoin as an isolated thing from society. It's like the whole society is going towards renewable, and Bitcoin is not different than that. It's not that Bitcoin prefers dirty energy than I mean, it's just an industry, as I said, and as the production of energy, indeed Bitcoin has some things that are very unique, that you can put a Bitcoin miner in a power plant that is not connected to the grid yet. So for green energies, it's very good, because there's a lot, for example, with wind generators, many times you have the fields of wind generators, that are not plugged into the grid, so they can be for a year, for example, not producing any energy. With this, you can have a green power plant producing Bitcoin, while the connection to the grid and the provision to the society can be established. So Bitcoin in that sense, also, for example, in hydro plants, in power plants based on hydro, you can also, like, for example, there's a lot of energy that is, if not used, is discarded. With this, you can use that energy and pay for the operational cost of the plant. So in that sense, Bitcoin can be like anything else. And in cases, for example, where Bitcoin is put in very cold regions to avoid the cost of cooling, you can create greenhouses and produce food for the region, for example. So I think we are going to evolve. At the beginning, it was like a race and nobody was thinking about efficiency, but I think more and more we are thinking about efficiency. So the energy industry and the Bitcoin industry will start working together, and they will both evolve into a green direction.
Can I say something? Thank you, Abba, for bringing up the question from Connor. We have 2 sessions tomorrow in Blockchain Island in the afternoon for smart energy. So maybe Connor can jump in. If you don't know how to do that, ask Amber, and I'm sure that she can fix you up on our website. But allow me just 1 second, Ian. I'm most grateful with all our colleagues from South Africa to Latin America, and good to see you, Diego. I know you will be talking to Confirm in a minute, but just one simple message that I have learned yesterday when we opened Blockchain Island. We have our Minister for Finance from Ireland. And one thing that is very encouraging is that our minister suggests in EU, the politician is no longer asked, what is blockchain? The question then is, how are we going to use it? And so we look forward for RSK, money on chain, to come all the way to Europe. If you come to Europe, please talk to Ian. Please come to Ireland.
Absolutely. It would be a pleasure. And, I'm very proud of the ecosystem we have built, in the sense that it's an ecosystem that is connected to the real economy, to the needs of society, individuals. It's like, and they have, I'm very proud, they won't say it, but they have built like protocols that are top of the world. Like I can say with pride that I think money on chain is the best, the best stable asset protocol in the world today. It has survived 2 crashes of the Bitcoin price flawlessly, soaring just past the first one with flying colors. So it's like, and well, Coinfirm is they are bringing this AMLT, and we are working on some innovations to start doing peer-to-peer compliance to remove like third parties that can be turned into you know, monitoring entities of the individual. So I think we are innovating, but innovating with purpose, and I love that, and also doing, like, from a technical point of view, some things that are amazing. So we would love to put all those technologies to the service of
We look
Ireland
forward
as
to
well.
see you in Dublin, Max.
Yeah.
Thank you.
Yeah, we have 66 data centers running in Ireland alone. So talk about energy.
Yes.
I have to go. My boss has texted me where I am at 1 o'clock. So
Yeah, you normally go for your lunch.
Well,
Thank you,
my
Alba,
sleep,
and
my sleep.
thank you, everybody, and
Thank you.
I'm most grateful.
Thanks
Thank
very much,
you.
folks.
Thank you
Bye-bye.
very much.
Bye-bye. Big
Bye.
hug to everybody.
Thank you, bye.